Hi everyone, in this video I want to discuss about the situation MPW faces considering the recent news before the dividend cut and what happens now that the dividend cut actually happened. So I want to discuss all this in detail. Basically this video will be covering the recent news before the dividend cut, what I consider also being linked to the dividend cut. If the dividend cut was really necessary, we'll discuss a bit about it. I want to discuss as well the MPW current situation now that had the dividend cut. Compare MPW before and now. Before the dividend cut, when the tenants start struggling after the pandemic to pay and all this turmoil started being revealed, and how we are now. We do a quick comparison to show pro and cons, how MPW is now, in my opinion, and what I'm doing with my MPW position. I'm an MPW shareholder, so I want to discuss about that as well. But just remember, all we discuss here is only my own opinion. You should do your own research because I'm not a financial advisor and this is not a financial advice. Without no more delays, let's start. One of the recent reasons that MPW will be in such a turmoil is we've seen some news coming up in the last few weeks, even before the dividend cut, that it had sunk the stock even down. The stock was already dropping a lot since the recent struggles MPW faced. And then this article of Wall Street Journal, the article saying that MPW said its tenants Prospect Medical had closed on $375 million in new financing from third-party lenders in a deal that would benefit both MPW and Prospect. So there was a close of a deal which would benefit MPW and Prospect. This is MPW's words. But then Wall Street Journal is saying that California state regulators ordered the transaction be put on hold according to the order that was sent to Prospect. And then MPW responded saying that is not controversial, it's not something they had to bother to put on their Q2 earnings, because that's another thing that the Wall Street Journal was saying, that they did not disclose that in the Q2 earnings, so they are trying to say that MPW was being misleading. MPW was saying that it is not controversial, they didn't have to put that, and they expect that the transaction will be approved in the end, because they are saying that the transaction is on hold, is on review, is just a part of the process, and that was expected. To be honest, for me, this news, it wasn't much of a thing, because I think the reaction in the market was as the California state was denying the transaction, was put it down, but what actually was happening is just put on hold, and that's bureaucracy. There was a close on the deal. This happened. This MPW and Prospect had a deal closed. And that doesn't mean that the transaction straight away happens. This type of thing is bureaucratical. So there's bureaucracy and involves regulators and many things. So I don't see this exactly as a bad thing, but we discuss further on. We will discover in the future if the California state say, yeah, no, this won't go through, and that would be bad. But according to MPW, there's no reason for that to happen and should be expected to be approved. And then another news that came was the downgrade. Following MPW's latest earnings report, Bank of America downgraded the stock from neutral to underperform, while Raymond James even downgraded it from strong buy to underperform. So Bank of America and Raymond James downgraded MPW following their beliefs that the company is struggling with their tenants, is struggling with a lot of debt, which is true. And I just want to give you my quick opinion on this. So that was the recent news that had beaten the stock down the most, I would say, lately. and we'll be going to discuss a bit the relation of this news and the dividend cut. Here's the Dividend Fire. Please consider to subscribe to the channel, because here I share all my thoughts, all my journey seeking retirement as early as possible. I'm seeking to be very aggressive, and I share all my updates. I highly recommend you to subscribe so you don't miss any content and you can see this journey. Please subscribe to the channel. So then eventually the dividend cut did happen. A question I ask myself is, the dividend cut was really necessary? So MPW last quarter released an FFO of 41 cents. That would be, if you compare with the 29 cents they were paying quarterly for the dividend, this would equate to a 7% FFO ratio. I'm considering even the AFFO, which is a bit more conservative. The guidance, they stated that the expectation for a year would be 153 for the normalized FFO, and this would equate to a 75% FFO ratio with the old dividend before the cut. So this would tell us that they don't need a dividend cut. The FFO is covering it. But what also was in play is, would cover, but it will be a tight game. They still have a big debt to pay, although since they have sold some properties, they sold those Australian properties, and they have stated that the debt that was maturing in 2024 is covered. They weren't concerned about that, and they have a bit more flexibility for the following years. So maybe they wouldn't need to sell more properties. Maybe they would. They could keep the dividend, but they will be a bit in a tight spot. So yeah, they could not have cut the dividend if they wanted, but they would be like struggling a little bit, and could have possibility they would end up selling another property. They really were trying to not cut the dividend. That's why they sold that Australian properties. They were trying not to cut, but I believe they actually cut the dividend most because of pressure. All these articles was coming. The MPW basically had a target in their back. They know that MPW was struggling with their tenants, with the interest environment we live now. So MPW had a big target in the back, and everyone chose MPW to be the one to be attacked. So MPW was, the management was under a lot of stress, and they were like, okay, we'll be for a few years receiving all these attacks, all the media will be targeting us, the sellers will be strong and selling the stock, and the management, and also would have the challenge for the business itself, because yeah, they will be paying a high dividend, the payout ratio would be a bit on the limits there, wouldn't have much money after paying the dividend. They wouldn't have much money available to reinvest the business, to pay the debt. They could end up selling more properties, would be bad for the business. So they were on all that tough moment. So they decide, okay, let's cut the dividend, let's strengthen our balance sheet, and let's remove this target of our back, because they'll be delivering what they wanted. That's what they want to see, was a dividend cut, and that's what they were kind of delivering to the market. So let's discuss now MPW current situation. So now the dividend cut did happen. The MPW current situation is that they are paying 15 cents per quarter. We have 6 cents per year. Guidance give an estimated NFFO of 1.53. So this gives us an NFFO ratio of 40%. So now we can say the dividend is quite safe. There's room there for them to use money to reinvest in the business, to pay debt. So, okay, now they have room to breathe. And let's compare what is MPW before and what is MPW now. I think this is a strong point here. Let's discuss here, like, is MPW better than before? Is they got worse? Let's discuss that. So the dividend, step by step, dividend got worse. You get paid 29 cents, now you get paid 15. It's worse. Straight cut. There's no discussion here. Consecutive hikes. So they were 10 years increasing the dividend. Is so comfortable for an investor. Is see that the company has a commitment with the shareholders. They increase the dividend every year and have increased for 10 years. I used to love that. And MPW, unfortunately, we don't have that anymore. We have to keep the old way again. Let's hope that MPW can increase the dividends every year. Let's hope they continue having this commitment and we don't see any dividend cut anytime soon. So got worse. Still with healthcare. This was the heaviest tenant, the heaviest tenant operator on MPW portfolio with a 40% MPW portfolio. So they were very heavy. Now that as they have released in the last quarter, Steward Healthcare with a concentration only 19%. A decent difference from before. That's good to bring a better diversification, reduce a bit the risk they had relying on Steward Healthcare. I consider that to be better. The portfolio properties, they used to have 444 properties. Now they sold 7 properties of their Australian portfolio. And now they have 437 properties, considering just the 7 Australian properties that they sold. I'm not sure if there was more properties. I'm not very aware if I am missing some properties they sold here. Please let me know in the comments. But as far as I know, it was these Australian properties. So it's worse. They have less properties than before, which means less revenue as before regarding to these properties. The FFO ratio was around 75%. Consider the guidance, consider the future guidance. And now with the dividend cut is 40%. So it's better. Then the FFO is better. There's more room there to work. There's more room to pay debt. There's more room to reinvest in their business. So we have a better growth for the future. The ability to pay debt, they were in a tight spot. They didn't have much money to pay debt. That's why it happened. They had to sell properties before. So could be possible they would sell properties in the future when the maturity of debts arrive for following years. And now it's improved. Seems they have a better room. They're paying less dividend, which means more cash available there to pay debts or reinvest in the business. And the chance to sell more assets were quite high before for the same reason I stated before. And now it's a bit low. Like it's still chances for them to sell assets. There is, but I think it's quite low now since they have more money available. I hope they don't go selling more assets. That would be bad. Even after dividend cut, they still selling assets. That would be really bad. And as a shareholder, I'll be quite sad and not happy at all. But overall, that's the worst and what got worse and what got better. Leave your opinion, what you think so far. But just before I give my own opinion on that, here's the Dividend Fire. Please consider to subscribe to the channel, because here I share all my thoughts, all my journey seeking retirement as early as possible. I'm seeking to be very aggressive, and I share all my updates, the dividends I receive. I share my salary. I share all my journey. So if you're interested to see my journey, to learn from my experience, and also share your experience as well through the comments, be part of this community. Please, I highly recommend you to subscribe so you don't miss any content and you can see this journey. Please subscribe to the channel. So now what I'm doing with my position. So I have 136 shares of MPW with a yield on cost of 6.65. The current price yield is 8.56. My average cost is 9.02 and the current price is around $7. I'm down 22%. So what I'm doing and what are my thoughts? So for me, I'm sad with the dividend cut. I didn't like in a side because of course I want to get paid more dividends. But if this means that the stock is going to, if the company is going to have a stronger balance sheet, will be able to get healthier with that change of the dividend cut, will be able to pay more debt and be able to reinvest in the business so it can grow more in the future. Yes, I'm not that sad. I can accept that. So for the purposes during the balance sheet, I can accept that. But also with the expectation that we will be seeing more growth now. Maybe not very soon, but in the following years we get to see more growth. So that's my expectation from MPW. Okay, they cut the dividend, but they might be a solid company that they were before. We'll be able to see the upside in the following years. So I have I used to have 100 shares. Since the price has been coming down a lot lately, I have added more shares, so I have 136 now. And I intend to bring my shares to up to 200 shares. So as far as the share price is still as low as it is now, around 7% or even below, I intend to add a bit more till I reach 200 shares, and then I'll be just sitting there and let the company do its job and show the results for the long term. That's why I'm an investor, for the long-term investment. So it doesn't make any sense. So we see every single news will be concerned. Let's wait for the balance sheet. Let's wait for the quarter results. Let's wait for the annual report. And then we can take decisions based on actual results, not just every news that the company, not every news that the media say this happened or all this speculation. Because if you care about every single news that's coming up, you go mad. So it's good to read the news, think properly, wait to see the results. Don't go left or right just based on every speculation you see coming in the news. That's my take. I'm confident and hopeful that MPW will eventually increase the dividends because they had a dividend cut in 2008. On 2009, from 2008 to 2009, they had a dividend cut, and then they kept the dividend 2010, 2011, 2012, and from 2013 onwards, they were increasing their dividends. So similar thing can happen. We had a dividend cut now in 2023. Maybe the following years they just keep the dividend, maybe they won't increase. And when they feel more comfortable, they'll be increasing the dividend, and hopefully we reach another decade there or even more with dividend hikes. That would be really nice. So, and that's my expectation as shareholder. Please leave in the comments what your thoughts, MPW, you are bullish, you are bearish, what you think, you are sad, you are happy with the dividend cut, what's your take on the stock. And I stay here, bye bye, see you next video.